Understated. I think all of these, whether it be the World Gold Council or the Silver Institute, might be very well meaning, but I think the information is biased and understated. And it goes back to the exact same thing, how China has never reported, or why haven't we allowed an audit of Fort Knox in 70 years? So these are all these are all good indications, but I would say the numbers are vastly understated to the true reality, which would then make this far more bullish than it actually is.
The global gold market is experiencing a shift as gold prices climb to historic highs. Central banks, including China and Saudi Arabia, are making significant undeclared gold acquisitions, potentially signaling a move away from reliance on the US dollar. This trend reflects the long-term strategies of Russia and China as major gold accumulators. AndySchectman, CEO of Miles Franklin, highlights the trend of concealed gold accumulation by countries like China and Saudi Arabia. For example, Saudi Arabia purchased 160 metric tons of gold without officially reporting it, suggesting that global gold reserves may be significantly lower than reported. China, in particular, plays a dominant role in the global gold market. For over a decade, China has been the world's largest consumer of gold, and for the past 15 years, it has held the position of the world's largest gold producer. In an exclusive interview with China Daily, David Tait, CEO of the World Gold Council, emphasized China's evolving role, noting that the country is transitioning from being a follower to a global leader in the gold market. According to Tait, China's influence on the worldwide gold market will grow in the coming years. Schectman believes this underreporting of gold and silver reserves makes the markets for these precious metals even more bullish than they appear on the surface. He argues that the official figures released by organizations like the World Gold Council and the Silver Institute do not fully capture the extent of global demand, particularly when central banks are discreetly stockpiling gold. As these hidden purchases come to light, it becomes increasingly clear that the international gold market is far more dynamic than previously understood. With China and other nations quietly increasing their gold reserves, the market outlook remains bullish, driven by forces not immediately visible to the public. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
If I had to argue, I'd say much of the information that the World Gold Council gets is fugazi, in the respect that, like, for example, China, they tried to tell us they weren't accumulating gold. They used to keep their gold numbers pegged around 1,200 tons for years and years and years, yet they produce more gold than anyone in the world. If gold is accumulated by the People's Liberation Army, it's not reported to the IMF. If it's purchased by the PBOC, it is. If it's purchased by a proxy bank on behalf of the PBOC, it's not reported to the IMF. If it's purchased directly from the refiners by the PBOC proxy banks, or in South Africa or Switzerland, it's not going to get reported to the IMF. And if gold is under 995 pure, it won't get reported to the IMF. Think of what they're doing with silver. I'm sure they're probably doing it with gold too, where they're flying around and buying doré and concentrate, which is not pure. And then they are refining it at home. That's not getting reported. I mean, and they're the second largest producer of silver in the world, and they're doing this. So when we talk about their efforts to hide how much silver they're accumulating, they're doing the exact same thing with gold, as are many of these countries. Look at Saudi Arabia. Saudi Arabia purchases 160 metric tons and tries to hide it, but the Swiss import-export numbers caught them. Well, if they had done it through a sovereign wealth fund, well, they probably would have got away with it. Anyways, the bottom line is that I think these numbers are a good indication, but I would say massively understated. Understated. I think all of these, whether it be the World Gold Council or the Silver Institute, might be very well meaning, but I think the information is biased and understated. And it goes back to the exact same thing, how China has never reported, or why haven't we allowed an audit of Fort Knox in 70 years? So these are all good indications, but I would say the numbers are vastly understated to the true reality, which would then make this far more bullish than it actually is.
No
They're the
default risk.
same people that implemented Dodd-Frank and this, to a degree, I guess they're not, but they are, and Basel III and all of these and bail-in legislation. I mean, this stuff's coming, and sometimes I feel sick and tired of being the little boy who cried wolf. But if this doesn't tell you, man, that the most well-informed traders in the world are telling you their biggest concern and why they would own gold is default risk
Yep.
and
Performance
what's the
during times of
geopolitical
crisis.
risk and what?
Performance during times of crisis.
Yeah, there you go. Well, there you go. And we're less than 4 weeks away from the BRICS meeting in Kazan, and 2 weeks after that is the biggest election in our history, maybe one of the two anyway. And you know, I'm sure there's no coincidence that they've been buying gold at record pace.
Who
You
are in the
saw there
decision
was
making.
it was going all around Twitter, and I don't have it, but I'll tell you what it was. Basically, there was a trader for Goldman Sachs, I believe, and he said in 2015, and they go back and show the date. So that's he's like, gold. Let's just face it, gold is a pet rock. It's dead in a pet rock, and it's doubled since then. So there you go. When you talk about your mainstream analysts or analysts and who are married to a philosophy whereby they know more and more about less and less till they know everything about nothing, focusing singularly on a certain criteria instead of looking broadly at what's happening and unfolding. And this is different than anything this country's ever been through, or at least in my opinion, it is. Not only, you could say some things repeat and are similar, but it's what's happening inside the country, the lack of unity and the divisiveness and red and blue and all of this stuff that really is going to make the next 8 weeks challenging, as far as I'm concerned, on many levels. Expect great volatility in the metals market, in the stock market, the bond market, if not at much else.
Gold prices remained firm above $2,650 for the second consecutive session on Wednesday, as traders raised expectations for another significant interest rate cut by the Federal Reserve at the upcoming November meeting. Despite this, high U.S. Treasury yields capped further gains for gold, with gold dollar hovering around $2,660, marking a modest increase of 0.14%. According to AndySchectman, gold's resilience has been notable, particularly in the face of positive yields, a strong dollar, and outflows from exchange-traded funds. However, recent data shows that ETF inflows are beginning to rise, and demand for gold is increasing as the Fed continues to cut interest rates, a move reflecting growing economic concerns. So far in 2024, bullion prices have surged by more than 29%, buoyed by strong physical demand for gold and the start of easing cycles by major central banks. This and persistent geopolitical tensions will likely keep traders focused on the $2,700 mark. Schectman points out that central bank activity and rising global uncertainties have played a pivotal role in sustaining gold's upward momentum. Let's get back to the interview.
In terms of gold holding up, it's held up in the face of positive real yield for the past 2-3 years. It's held up, or 2 years anyway. It's held up in the face of a strong dollar, and it's held up in the face of declining ETF outflows, as we've seen, like you're skiing down the Swiss Alps in terms of outflows. And now we're seeing the ETFs just start to pick up again, which is for the first time in 2 years. You're seeing reports like on Goldman Sachs that their trading desk is being inundated with gold requests, and the ETFs are starting to pick up. At the same time, we're seeing Powell pivot by 50 basis points. And they've been touting all along such a great economy and strong labor market. We know that's a lie, with the revision of over 1 million jobs between the 200 or 300 they revised during the year and the 818,000 they revised after the year. We understand that it's a lie when they tell us that the CPI is 3.3% or whatnot, and John Williams tells us it's much more. And so pivoting in the face of all of these lies, when they tell us that they feel confident that they've reined in inflation, yet they're 65% away from their target of 2%. It's a lie. And yet it, to me, speaks to the fact that they're very concerned. Now, as far as gold, we've had outflows on the ETFs. We've had a positive real yield. We've had a strong dollar. And we've had massive central bank buying. Now, all of a sudden, you have ETFs moving up and you have yields moving down. And you have a realization by the world that, all is not well. And I say that to you because immediately after he lowered the rates by 50 basis points, the bond market, the back end of it, sold off, meaning rates went higher, because the world is saying, at what point do we get tired of a country that's going as deeply into debt as you are, with all of the other issues that we've talked about ad nauseum, and at the same time, you now have the hubris to actually lower rates. They should have never lowered rates. They should have continued to raise rates. They've never even squash the inflation bug, which is only going to get worse and worse and worse. Now you look at that in terms of the price of precious metals, that hasn't even been fully priced into the equation yet, as far as I'm concerned. The American public has been largely asleep at the switch. And if we see a broad participation increase, as we've talked about forever, the 0.5%, if it increases to 2 or 3 or 4%, as paltry as that sounds, represents a substantial increase in demand. I don't think that the markets have even begun to price in things such as the rolling out of a BRICS settlement currency, such as the American participation. And there's an article that I just read by what's his name? Kuz Jansen, I think it is, and he was talking about how all the BRICS nations countries are accumulating lots of gold in those that are tied to Project Enbridge. Well, no doubt, and we've talked about why they've all been bringing it back and why they've all been buying. We find Saudi Arabia, who's straddling the line here, accumulating 160 tons of gold. Well, who cares, right? Well, the people care because they didn't report it through the normal chains, like through the IMF, and instead it was the Swiss import-export numbers that flagged it. They're straddling the line. They've become full participants in Enbridge, but kind of hedging about their full participation in BRICS. They don't want to upset the apple cart, but the apple cart is going to turn upside down.
As central banks quietly increase their gold reserves, particularly amid geopolitical tensions and economic uncertainty, the potential for further price growth remains strong. This hidden demand, coupled with the economic shifts affecting interest rates and currency reliance, underscores the continued importance of gold as a stable asset. The market's bullish outlook will likely persist as more of these concealed activities come to light, offering both challenges and opportunities for investors. What are your thoughts on the long-term implications of central banks quietly increasing their gold reserves? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.